Got away with the numbers. Underneath the lamp he sits and ponders every form and every line. He's here to help you make things fine. Tax time, it ain't so bad with Dana by your side. Don't feel sad, refunds and answers to set you free. Tax time with Dana, it's where you wanna be.
Welcome back, everybody, to yet another episode of Tax Time with Dana. Today will be our 5th episode of the season, and we're going to review your IRS transcript code 150, and we're going to talk about how that plays a role amongst the other codes into determining what your refund is. So a quick summary of what the transcript code 150 is the amount that the taxpayer owes for the year. So this number is determined based off of your adjusted gross income, and what they determine your tax liability is based on your adjusted gross income, and that is after your deductions and your income is calculated, whether it be self-employment, W-2 wage earnings, gambling winnings. They do not calculate credits at that point. So this calculation of the code 150 was done before they factor in your credits. So you might say, I don't owe taxes. Why does it say I owe, $8,000? That's all factored before the credits are done. And I have a formula that I'm going to go over for this to explain it to you. So what I've done for this video is I've pulled some transcripts off of the internet, some off of tax forums or Reddit or things people have posted their transcripts on. So there's no personal information on there. But what I have done is pulled 3 examples. I'm going to go over 2 examples that I've pulled where someone has just like employment. Another person has like some mixed income with self-employment and regular employment. And then another one where someone has, I think it's just self-employment. But on the third example, I'm actually going to have you, the viewer, try to determine what their refund is based off of the information I'm going to give you in this video. So a little way for you to demonstrate if you've actually learned what the video is intended for. And I'm making this video because I have gotten a number of questions about this specific code and what it means. So I figured the best way to do it is to tell you what it means and then show you how it works into the calculations. So that's what we're going to do today. So I'm going to pull up the next slide and remove myself so you can see what's going on here. So here is our first example. So you can see here this person, I said, is a taxpayer that has 0 tax liability. Now, the reason I say that is if you look at the transcript, you'll see they do have an adjusted gross income of $4,878. So that's what their income was after their deductions. And then you'll see that they have a taxable income of $0 because their adjusted income is so low that there's no tax liability there. That said, they're still going to have withholding from their job. So whatever amount was taken out of their withholding, as well as the credits. Luckily, 766, they have a child tax credit here, or a few child tax credits. So if you look at this line here, you can see the code 150, the tax return filed, and the amount is $0. So the 150 tells you the return was posted to the system with a tax liability of $0. Now, how does that play into their refund? To get their refund amount, the quickest way to do it is actually just look at the balance. So if you look at the account balance on this transcript, you'll see their account balance is negative $15,471. Now, because that is a negative number, that means that is money that the IRS owes to this person. If that account balance was a positive number, then that would be money that the taxpayer owes to the IRS. So when you're looking at an account balance, a negative account balance is money they owe you. A positive number would be money you owe them. So that's what I explain here. The account balance is a positive number. It's a number that the money is owed to the IRS. For example, here I said if it was a positive $450 in the account balance, that means that person would owe the IRS $450. And then once on the transcript has been fully updated and there's an 846 refund issued code, the balance goes to zero because now all the money's been settled. You'll also see here on this transcript there's an 810 refund freeze here. So obviously this person was being reviewed for some reason. If I'm going to guess, I'm going to look at their income and see that their adjusted gross income is only $4,878. But if you look at their withholding, they had an exorbitant amount of withholding done. So why was there so much withholding? They probably didn't make that much money from their job. Maybe it was from a gambling winning or something like that, and they're just reviewing to make sure everything was filed correctly. But so to calculate what their refund is, in this case, the $15,000, what you need to take into account is their taxable income after the deductions, which for them was $0. And you also see they had no self-employment income, and therefore their tax for the year is $0. They made so little money as far as adjusted gross income goes, that little number over 4,000, that they don't owe any tax for the year. From that zero tax liability, it's now time. Now they factor in the credits and the withholding. So in this case, for the withholding, which is code 806, they took out $5,705. And then their credits, in this case, the child tax credit, line 766, was $9,766. And just to reiterate, withholding is what is taken out of your paycheck throughout the year for taxes, as well as say you do have like a gambling win or a lottery win and they withhold money from that. That's the withholding amount. So the formula to determine what the person's refund or how much they owe the IRS when it's all said and done is they take the tax liability, that code 150 amount, then they subtract the withholding plus credits, and that equals the refund or money owed. So in this case, $0 minus 5,705 plus 9,766 equals negative $15,471. And remember, a negative balance equals a refund. So you can see here, I placed an arrow there next to the account balance. So that is what the formula has determined, that they will be getting a $15,471 refund, of course, once that freeze on their account was lifted. Okay, so that was example one. So hopefully you're following me, but if you didn't, we're going to be going over another example before I feed you to the wolves and have you do one on your own. So here's our next example. So this is another example of mixed income, and they have some tax liability. So you can see this person's married filing joint. Their adjusted gross income was $41,726, and after their deductions, was their taxable income was $12,324. So they probably just took a standard $28,000 tax deduction, and then their tax per the return is $153. So that's factoring in their W-2 earnings, their gambling winnings, their self-employment tax, all that calculated together equals they're going to have a tax liability of $153 for the year. So if you look down at the codes, you'll see code 150, their return posted to the system with an amount of $153. That is their yearly tax liability for this year. Remember, the credits have not been factored in yet. So this person does have some credits that we'll have to factor in. They have the withholding throughout the year of $311. That could be from paycheck or gambling winnings or like whatever they had that was withheld. There's a credit to their account, 766. That would be child tax credit, most likely $2,240, and they have a 768 earned income credit, $5,285. So those credits we can now factor in to determine what this person's refund would be, or if they're going to owe. But we really don't even need to do that work, because if you look in the top left corner of the transcript, you'll see that their account balance is negative $7,683. So this person is also receiving a $7,683 refund, provided everything goes correctly once that 846 pops. But the way they determine that, how do we know that that's what the refund's going to be? We can use our formula. So their code 150 line, their tax liability for the year is 153. The withholding amount is 311. Their child tax credit 766 code is 2240, and their EITC 768 code is 5,285. So remember the formula: the tax liability minus the withholding plus the credits equals the account balance, which would be their refund or money owed. So the $153 tax liability minus those other things combined, added together. The $311 for the withholding, the $2,240 for the child tax credit, the $5,285 for the earned income credit. So those three numbers add up and then are subtracted from the $153, which gives a negative $7,683. Negative number, negative account balance. That means it will be a refund from the IRS. So a negative number, it means a refund for the IRS. If they had factored in all those numbers and say, sorry here, let me just if they factored in all those numbers and the number was positive, then that would be money the taxpayer would owe to the IRS. But because it's a negative number, a negative account balance, that is the refund amount. And I put the arrow there on the negative $7,683. And then once again, when the 846 refund issue code posts, once the return has finished processing, that account balance will go to zero. All right. So now it's your turn. Using the information that we just went over, factoring in what the tax for the year is, that code 150 line, try to use that formula we went over to determine what their refund will be. So here's the transcript we're going to be looking at. This person's a single person. They have an adjusted gross income of $12,578. And you'll see on taxable income, it's $0. So after their deductions, their income was low enough that there is no taxable income from work, or W-2 work, I should say. I should be specific. No taxable income from W-2 work. And then if you look at the self-employment, they have self-employment income of $12,499. So just looking at those two numbers, $12,499, $12,578, if they did a W-2 at all, it was for a couple hours. Most of their work was done through self-employment, you can tell. Therefore, their self-employment tax is $1,913. So that's what their tax liability will be based on their self-employment income. So they have a tax for the year, a code 150 amount of $1,913. You can see on this, there's also a refund freeze on there. We're not going to factor that in, but this is likely because maybe they're looking at the fact that they only had a very small amount of W-2 earnings. Maybe it was a credit they claimed. Maybe it was a deduction they took that's being reviewed. But we're not factoring in the refund freeze here. We're just going to use the amounts that we have available to us, which is their tax for the year, their tax liability, and then the credit, the child tax credit they have of $8,375 that you can see there on the 766 line. So take into consideration, I can tell that this person did not work a W-2 job, at least for very long, and they were only self-employed for most of the year. So because of this, you'll notice that there's no withholding in the calculation. There's no 806 line there because they had no W-2 job to have any income withheld. So you don't have to factor in withholding on this one. In this case, you'll notice that I omitted the account balance. So you can't cheat and just look up the account balance and try to figure out what their refund is. I'm going to have you do the calculation yourself. Dun, dun, dun. Okay, so I'm going to have you use the information based on the first two examples. Maybe rewind the video and watch those two examples. And remember the formula. Okay, remember the formula. There's less to use in the formula. There's less to use of the formula because we don't have the withholding amount. So you really only have to worry about two numbers. If you look at that transcript, you only have to worry about, let me eliminate myself again, the $1,913 and the $8,375. So I'm going to leave this transcript here for, about 30 seconds, because that's all you should really need to be able to figure this out. And I'm going to give you about 30 seconds to figure this out, and then we'll come back. I suppose I could have said you could have paused the video as well. All right, so let's take our review. Did you get $6,462? If you did, if you got a $6,462 refund, $6,462 refund, then you would be absolutely correct. You would be taking their tax liability minus the withholding, which there is none on this return, plus the credits, which they do have, the child tax credit. So you would get the $1,913 minus $8,375, and that would equal a $6,462 refund. So if you calculated that number correctly, then I would say you took away a good amount of information from this video, because you learned how to do the formula. So just remember, the transcript code 150 is the tax liability for the year. Remember that tax liability is before your credits. The tax liability is after your deductions, whether it's a standard deduction or itemized deduction, but before your credits, your child tax credit, your earned income tax credit, solar tax, whatever credits you took. It's that 150 number is calculated before the credits. It simply means A, your return has posted to the system, and B, if there's a dollar amount there, that's the amount of tax you owe for the year. And yes, you owe taxes. Everyone owes taxes. You might owe $0 or you might owe $5,000, but you can see from our example that a lot of that money is paid throughout the year out of your paycheck anyway, which is why people get a refund at the end of the year. And then what isn't paid is often covered by credits, and then you get a refund based off of that. So I hope that you found this. I hope you found this video valuable. I hope you learned not just about the 150, but like more about how the formula is calculated to determine what that account balance is. If you did, make sure you leave a like and subscribe below. Hit that notification bell. We'll be posting videos continuously throughout the tax season and beyond, but mostly tax specific this time of year to help you guys out. I hope everyone has a great, take care.